Good morning, good afternoon, and good evening to all of you from different parts of the world. Welcome to What's Next for Data Centers in India. As the digital economy continues to expand, especially in the post-COVID world, data centers are rapidly emerging as a preferred pandemic-proof real estate asset class. The global data center ecosystem has witnessed over $100 billion in the past decade, as organizations chose a mix of large co-location facilities, private and public cloud computing instead of small captive data centers within the premises. As demand for cloud storage keeps expanding on the back of continued growth in the Internet of Things, wider penetration of 5G wireless networks, and prospects of self-driven vehicles, the need to spend more on data center infrastructure will increase manifold. This is especially true in India, which is witnessing increasing momentum towards digitalization. Global trend on digitalization, cloud adoption, big data, industrial automation are playing out in India too. With investors, global hyperscale cloud providers, and colo operators committing substantial investment, the outlook seems very promising. Investors are willing to take the risk of greenfield development, unlike many other asset classes, wherein the focus was rent yielding or built up assets. With explosion of interest from global operators and investors, it's a matter of time that India reaches international standards of scale and efficiency. The investment trend started back in 2012 with entities acquisition of NetMagic Solutions. Since then, we saw quite a few M&A activity with global majors such as STT Equinix establishing presence in India. However, as investments were driven by local operators, total colo capacity was concentrated heavily amongst the top 4 players. Over the next 5 years, this will change significantly. For example, India's present colo capacity of 8.6 million square feet is comparable to Hong Kong, which has 8.3 million square feet of DC stock. The demand is expected to add another 12-13 million square feet over the next 5 years. Leading cloud firms, AWS, Microsoft Azure, Google Cloud have drawn massive investment plans either through JV or by themselves. Similarly, local developers such as Hiranandani Adani have tied up with Yota and EdgeConneX respectively. As this nascent asset class continues to gain momentum, it will attract more interest from Indian global developers, infrastructure firms seeking international operator partners with proven technical and operational expertise. India's inherent advantage of cheaper construction costs, skilled yet low labor costs, will play out favorably compared to mature markets of APAC and US. Indian authorities are also supporting the industry's growth with incentive and friendly policies. A national data center policy is in the works with clearly laid out guidelines and incentives. Some states have already implemented their own policies to attract investors. Let's hear from our experts today about their experience and findings of more mature data center markets of US and Asia Pacific. As some of you may know, US is home to some of the largest DCs globally. Tier 1 markets such as Northern Virginia continues to add capacity and reports low vacancies. Singapore, Tokyo, and Sydney are the leading markets in Asia Pacific, with Singapore having the highest capacity per capita globally. Lots to learn for India in this space of growing asset class, with global commitment towards sustainability as the country increases efficiency and capacity. Today in our spotlight on India, our subject matter experts, Kevin, Todd, and Vivek, will discuss key global industry trends and its impact on India, the growing Asia Pacific market and how India will emerge as a potential primary market, the surge in demand in cities across India. With that, I would like to welcome Kevin Imboden, our DC expert from the Global Research team. Kevin, over to you.
Fantastic, and thanks for the handoff. I'm very excited to talk to everyone this morning. And we'd like to go over some of the key industry trends that we're seeing across the world and that are certainly affecting India as well. Now, for those of you who saw our recent Pan APAC webinar, and if you hadn't, I absolutely suggest you see the replay because it was fantastic. You'll recognize this slide, and you'll see the discussion about major cloud services leading the way across the globe. Well, why is that so important? This is a known story at this point, right? The last year and a half accelerated corporate IT transformation. Everyone got sent home. They had to work from home instead of the office. And across the world, we saw this continuation where large companies had to move to the cloud. Mid-sized companies had to do the same. And then they had to figure out, okay, is this scalable? Does this work for us? What are the positives? What are the negatives? Sometimes there are cybersecurity issues if you're not prepared to go across multiple clouds with your applications. And then you always have to keep in mind what the costs are going to look like. Regardless, companies were forced to do this. And as a result, the major cloud services, speaking of Amazon Web Services, Google Cloud, or Microsoft Azure, have all done spectacularly well in recent times. You see some Q1 numbers on the screen there. Those have been typical over the last year or two. Companies and government contracts alike are moving to the cloud. Governments are often way behind in their IT portfolios and they're looking to scale similarly. And so that's going to be a big story going around the world coming up over the next few years. What are governments going to do? And each government entity needs a cloud strategy. So think about how complicated that'll be as many large countries go through that. Some of these major cloud services are investing in local markets around the world too, whether it's Italy, Mexico, Poland. We've seen this where a major cloud service will partner with some government entities and then create a skilling program to train local IT professionals. And as a result, we're expecting, as with our partner Structure Research, who helped us with the chart on the right there on the screen, some massive growth over the next few years, hundreds of percent for the three major cloud services you mentioned, and also for major services out of China, so Alibaba, Tencent, Huawei, and Kingsoft. They're competing in many areas around the world, maybe not in Europe or the US yet, but they're coming and they're doing well in many areas. Now, a big story this year, actually really for the past couple of years, but we've seen just in the last few weeks, big portfolio sales, a lot of M&A. Headline story that came out is QTS, US REIT, couple data centers in Europe, haven't quite gone international yet. Well, being acquired by Blackstone for a big $10 billion will probably give them the capital to do so. The expectation is that QTS will likely become a global player rather than the US-based player. And they've done quite well in the US in markets such as Atlanta or Richmond, Chicago. And now they can have the capital to scale, and they will be taken private, so they won't have to be reporting quarterly earnings every month if they want to spend a lot on expansion. Digital Colony, they've been very acquisitive over the last few years. They purchased a landmark dividend fund for just under $1 billion US. That fund was mostly focused on older assets across the US, secondary, tertiary markets, leaseback, net lease assets. A lot of interesting properties in that portfolio that are leased for the next 5 to 10 years, and thereafter might require some elbow grease to bring them up to modern standards. So we'll see what happens with that portfolio. Mapletree out of Singapore. They're acquiring the former Carter Valdez Mission Critical 2 REIT assets. That's a $1.3 billion deal, similar to the landmark dividend portfolio, older assets, usually single tenant. And then Switch. Switch is very interesting. They've capitalized on the Las Vegas market in the US and some other secondary locations. They're now moving into Texas in a big way. They acquired Data Foundry for $420 million. This gives them a footprint in Austin and Houston. And then shortly thereafter, they also announced a move into a new campus right alongside the Dell headquarters in Austin. And so the big question that's coming up is who's next? We hear this a lot. And I think pretty much anyone and everyone at this point, quite frankly. Anyone who hasn't scaled globally and who has a robust platform in one country could be scalable. We just saw another deal very recently in the last couple of days with Digiplex being acquired. It's a portfolio of data centers across the Scandinavian region. A lot of hopes pinned on Scandinavia for their green or renewable energy. across data centers in general. So that had a nice portfolio in Norway, assets in Sweden and Denmark too. And so probably is going to be a mix of scaling companies, creating new companies, and so forth, but it's coming in the billions. Now, construction, plenty to speak of across the core markets. And then there's some markets that aren't so core that will be growing considerably in coming years. So we have a map that has red dots and it has orange dots. Red dots meaning that market currently has 100 megawatts operational. The orange dot means that that market will soon grow to that. And you're familiar with the primary markets that we see across Europe, across East Asia, and what have you. But there may be some surprising orange dots. We touched on some of the locations in Europe just a moment ago, including Scandinavia. You'll see Eastern and Southern Europe. Several markets in those regions are expected to scale considerably. These are often the primary markets or becoming the primary markets in their respective countries. And there's a mix of both corporate and government tenants there. In the US, a couple markets there, the Salt Lake Cities and Portlands of the world. Mexico, Querétaro, where the initial few deployments or large-scale deployments in Mexico are occurring. That'll be the primary market there going forward. Sao Paulo in Brazil, already crossing that threshold. Johannesburg in South Africa will continue to be the largest market on the continent. Now, you'll also see a few key dots across India too, because those markets are expected to grow, and we're going to go into much greater detail later on. Mumbai is already there, certainly, but Delhi, Chennai, Hyderabad, Bangalore, these are cities that are going to scale accordingly, and we're going to be talking about that in much greater detail. Now, primary markets, when you're looking at what's going on across them, you're seeing a ton of construction. So these are markets that are considered the largest in the world already. Northern Virginia, the king of all data center markets, will continue to be. We're looking at doubling the size of the largest market in the world over the next 2 to 3 years. So it took decades for it to get to 1 gigawatt. It'll take probably 5 years to get to 2, and it'll take even shorter to get to 3. The appetite for Northern Virginia is completely insatiable. London, very few restrictions as a European market. Most other European markets are going through power constrictions, whether that's Amsterdam that had to set a moratorium. Dublin is very tight on power. London doesn't seem to have those issues, and despite Brexit, despite the European Union exit, this is working out okay for London. There's plenty of local demand and a lot of comfort in that being the single European hub for a number of corporate users. My home area in the Silicon Valley is doing quite well, a lot of development underway, very tight market, sub 5% vacancy. And you'll see that a couple of the stalwarts around the world, the Singapores and the Amsterdams of the world, they're having a bit of issues with that moratorium in both locations. Green power, finding it, using it, and making it sustainable across both markets is going to be an interesting challenge. And as a result, both of them are getting passed up. And we're going to see that continue to happen if moratoriums in both places are not officially lifted. And not to leave out Mumbai, which we're going to speak of in quite greater detail later, but you see it already nearly Sydney-sized, and I think that surprises folks. Sydney is certainly a Class A market. We tend to be very bullish on it here. And we might be having an Australian webinar to talk about that more soon, so I suggest tuning into that. But you would be surprised to see that there are going to be several cities in India that will be eclipsing several other primary markets across Asia very soon. And with that in mind, I'm going to pass it over to Todd, who's going to take you around a greater APAC.
Thank you, Kevin. And thanks, everyone. I'm excited to be with everyone to share a little bit about the growing markets in Asia Pacific and how India kind of fits in and will emerge within that. I'd like to share with you the first slide. If you look on the right-hand slide, you'll see our Asia Pacific data center ranking for 2021. Cushman and Wakefield analyzes data centers across the world based on some leading market indicators, whether that be real estate, regulatory issues, ecosystem advantages and other indicators, and we make a ranking each year. Within Asia Pacific, we were really excited as we looked at our global rankings this year, that two markets, Sydney at number 3 and Singapore at number 5, were in the top 10 of our global markets, as well as the top 2 for Asia Pacific. I would note that if you get to the past the top 4 kind of tier markets, past Tokyo, there is at present a little bit of a gap. In saying that, we put the rankings out almost 6 months ago, and there's significant changes, as that moves forward, and very quickly the rankings can change as we move forward. You'll note Mumbai, that's been touched upon, is at number 5. It's already been announced that the total number of megawatts will double over the next 5 years. That will continue to grow significantly, and we're kind of anxious to see if that can close the gap on Tokyo and that it moves up a little bit further. Chennai is a market that's just outside the top 10, but is growing a little bit more significantly among the India markets. Hyderabad, Delhi, growing as well, but a little bit of gap and a little bit slower. So we'll see how they all work into the 2022 rankings. On the left side of the slide, you'll see our infrastructure map of the Asia Pacific submarine cables. Obviously, this is a very important communication infrastructure. It connects the countries and the continents around the world. And you'll see that the markets that are topping our rankings all have significant, cable connectivity already. And others that will have growth moving forward. Mumbai, being ranked number 5, you can see all of the connectivity and some into Chennai. One interesting thing, looking at India specifically moving forward, the telecom conglomerate Reliance has pretty recently, made an announcement that they're under construction for, one of the largest international submarine cables and networks focused on India. And there'll be 2 main cables that will come out of that. The first one will connect Mumbai and Chennai to Singapore and Southeast Asia. And that's kind of targeted for a mid-2023 completion, I think. The second cable will connect Mumbai to Europe, kind of hitting, I believe, in Italy, and also to the Middle East. And then as a part of those projects, it'll connect some of the other cities domestically within India as well. So as that very important infrastructure grows, that'll be an enabler, as we're watching the rankings and see, Mumbai and some of the other cities hopefully come up into the top 10 when we move to 2022. Next, I wanted to touch a little bit about the significant global capital that's focused and moving into the Asia Pacific region. It's accelerating, it continues, and as Kevin mentioned, it's very large numbers. It seems like we're hearing every few weeks another $1 billion that's being targeted or focused on us, on our region. There's a few of those major kind of transactions that are indicated here. In the media, as some of you may have read, recently, that Princeton Digital has announced their Japan market entry. It's about approximately $1 billion investment into a campus in Saitama, which is just outside in kind of greater Tokyo, Kanto area. Construction to start, later this year. AirTrunk, kind of backed by Macquarie, has seen significant growth throughout the region. There's projects of 20 megawatts in Hong Kong, 60 with a new project in Singapore. And here, where I'm based in Tokyo, there's super mega hub out in Inzai near the Narita airport of over 300 megawatts. It'll be one of the largest run data center hubs in Asia Pacific. Stonepeak launching Digital Edge throughout the region. They also recently announced some expansion into Japan, very central Osaka. They're opening a 12 megawatt project there. And as a market entry and strategy into Tokyo, they've formed a strategic alliance with Itochu Techno Solutions to kind of help their expansion into that market. A huge GIC out of Singapore, backing DC Space, I think, or Space DC, excuse me. We know that they're looking at several markets, but one of the markets that's very hot in the region right now that they're moving into is Indonesia, and we see a lot of interest in the greater Jakarta market at present. Several of these groups and other groups have already started looking at India, its target markets. It's very interesting. As heading our Asia Pacific Data Center Advisory Group for Cushman and Wakefield, have a lot of discussions each week, whether it be hyperscalers, co-location providers, these investors, or any players in the space. And up to a year ago, those were very focused on some of the major tier 1 markets. Jakarta kind of came into the discussion. Maybe Vietnam was being studied, but not as much conversation around India. Now it's very uncommon for India not to come up in those conversations. Direct development, asset acquisition opportunities, looking to partner with groups to get in for market entry. It's a very much on the agenda for all of these players in the industry right now. Moving forward, most of the capital in Asia Pacific to date has come into greenfield development. I think there's a scalability. The institutional and other capital is able to place more money into those projects sometimes. But operating assets are very sought after. They're just very hard to find. Sometimes the specifications in some of the older projects aren't up to some of the institutional capital standards, making it even more difficult. But a few examples here in Greater China, Australia, and Singapore. But I think what we've seen is kind of across the board, the cap rates have really compressed through time as these assets mature and the asset class matures itself. They're more recognized. The investors don't have to underwrite as much of a risk premium, and we've really seen cap rates come down into prime logistics rates. In some cases, even with prime or some office assets, kind of the same rate. Like I mentioned, being based here in Japan, I remember about 7 years ago, people were struggling and investors were struggling with data centers and asset class. Could that fit in a industrial fund, industrial REIT, infrastructure REIT? But certainly there weren't any, data center per se funds. It wasn't understood too well. We were working at cap rates in the 8 to 9% area. They became much more, recognized. We now have funds focused solely on that. And certainly, again, the cap rates are down in the 4% range for some, Tokyo or greater central Osaka assets, for example, and that's right in the range of prime logistics. Singapore, and talking to colleagues there, certainly, although we're dealing with the moratorium at present, we've seen over 100 basis points, compression over the last few years as that market has really matured. So I think India will follow and really see that as the market grows there. Finally, want to just touch on one driver that's really going to favor India. As all of these players are looking at the markets and need the connectivity and the coverage, throughout the region. If you look at the land prices, a lot due to land constraints and the lack of availability of land in some of these major markets, there's a significant gap in the price to just get in and start with land acquisition. And what we've seen with the land acquisition constraints, And as the prices has grown and the gap has grown on land prices, power sometimes follows that. You know, it's very hard to find the pricing there grows as well. But with, you know, a 200-time multiple between kind of top and bottom, a lot of the Indian markets are going to be are very attractive. Some of the other major markets, what's happened is they've really had to move out 30, 40, maybe 50 kilometers from the CBD, where some of the traditional co-location providers were actually located, to get land availability, get land that's priced reasonably, that makes the price per rack, you know, meet their internal hurdles. So I think, you know, this is really a bright spot, you know, for India as we look at that moving forward. And with that, kind of to drill down in a lot more detail on the Indian markets itself, I'd like to hand over to my colleague Vivek.
Thank you, Todd, and thank you, Kevin. So many insights, so many takeouts for all of us. In fact, not just the land pricing, but even the cost of power and the cost of data is significantly lower in India compared to others. So if you could just focus on India specifically, and in my conversation, we'll try to speak about the current status quo with regard to where the demand, supply, and investments are. A lot of people have spoken about that in the last 12 months. So we wanted to push the envelope a bit and also speak about or think about what next. Is this really hitting the ground? Are we seeing changes, investments on the ground, or are they just conversations on newspapers? Are we looking at what is the growth with so much of investment coming in? Some cities thinking of doubling their existing capacities. Will that create an oversupply situation, or are we just at the beginning of the curve? So I'll speak about India in two parts. One, the current status with demand, supply, and investments, and then a little bit of crystal ball gazing, some more gray cells used to see where Indian cities should pan out in the next 5 odd years. Now, if let's talk about the current stock and how this stock is going to change in the next slide. There are two donuts. One on the left talks about existing capacity, and on the right, what we expect to be added afresh in the next 5 years. Just a note of caution. The data here is based on official announcements of firms. There could be several transactions or plans which are ongoing. Firms haven't announced them yet, so we obviously can't include them here. So these figures will change in times to come, but it's very easy to estimate that the current 655 megawatt, which is about 437 megawatt of IT load, will see a fresh addition of about 1.1 gigawatts in the next 5 years. That just speaks for itself. Interestingly, if you look at the cities currently, Bangalore seems to be number 2 because of the investments made by data center firms over the last 4 or 5 years. Considering the boom we had seen in the IT take-up in the city, that's understandable. But not all that investment will go into Bangalore. It will be evenly spread, and you will see Chennai clawing back up to the second rank in terms of megawatts in India, followed by Hyderabad and Delhi. You would see Bangalore's probably come down to 3% based on these announcements so far, but we expect Bangalore to be pretty much in the same ranks of a Hyderabad and a Delhi in 5 years from now. So this is, as I said, the word of caution based on announcements so far. This would change. It's a very, very dynamic space, and these data points keep updating themselves every quarter. And taking a cue from what Kevin and Todd had spoken about, we saw acquisitions and joint ventures in India as well. So Equinix acquired GPX in 2020. Carlyle invested in Nextra, the data center arm of Airtel. More recently, we had Iron Mountain invest in WebWorks and EdgeConneX tie up with Adani. This is just a flavor of what's been happening. More such investments or joint ventures are expected. Some are in the pipe, some are announced, will get announced. And we expect this to change how the the entire landscape looks like. So imagine a 655 megawatt market was cornered by 4 colo players, which own 65% of this current stock. Out of those 4, very easy to assume that 5 years from now, that 4 will turn into 14. And that just shows the depth that will come into the market. It shows the amount of more resources and teams and infrastructure being put up across in India. So let's take a look at that a bit more in the next slide. How will this landscape change? So we usually, and all of you in the data center space are aware of these demand buckets, but we usually put them in the categories of colo firms, global cloud firms, and developer investors. And you'll be asking yourself on the slide, how come the cloud firms are so small in the current projection? That's, as I said earlier, they haven't announced their investments or transactions or acquisitions so far. So expect that small box on the top left of your screen to increase significantly as and when these firms start announcing their plans. But currently and in the future as well, the colo firms will remain the bread and butter for the industry, the largest takers. We've tried to also distribute the expected demand take up from them vis-a-vis the firms. And this is again based on what they have said officially. And we see Yota, Controllers, Entity, STT, Adani, far more number of names than what we had seen historically. The interesting bit here would be the category of others, which is 15%. Many of these firms are existing large players like SIFI or are new upcoming entrants who are yet to take more positions. So you can expect more diversity and more investments even in the donut that you see with regard to the colo firms. Many people end up saying that, what if these guys don't follow up on their investments and actually don't invest that? Now, here's the beauty of how we expect this asset class to mature in India. Even if somebody drops the plan that they had announced for India because of change in strategies or whatever the reason is, there are cloud firms who will fill up that gap. There are new developers, investors, this box that you see on the bottom left, who will take up that space. Some of those investor developers have aspirations to turn into colo players as well, or are internationally colo players and are partnering with people to come into that space. So we can expect broadly most of the announcements so far to get translated into transactions in India. The percentage share of each category might vary from category to category, but we do expect almost all the names here to follow up on their investment and make sure that they deliver on the investments that they have announced. Now, let's take a look at what those investments are. Let's do a deeper dive on, just as we spoke about the joint ventures and investments in at a global scale, at an APAC scale, similar investments have been done. And if we just collate them as we sit now, about 65% of the $11.4 billion announcements for data centers in India comes from FDI. 35% of that comes from domestic investments as well. But you can just see the sheer magnitude of capital which wants to deploy in setting up this asset class. Unlike what happened, let's say, in other asset class, let's say the office real estate or industrial or warehousing state, here, most of this money will go into setting up greenfield projects. So people are learning, they're more comfortable with investing in Indian real estate. They're more comfortable investing in India per se. And they are very, very sure that just as there is greenfield development taking place in other asset class, data centers now are will any new setup that comes up will be international quality, would be investment grade, and would be at par with the assets that we see of data centers in other parts of world or in mature markets. Now, you know all these names. Anybody in the data center space is aware of STT Telemedia, which is one of the largest colo firms in India. They continue to expand. ESR, which is a large name in the logistics industry space, they are entering the data center space as well. Entity has announced quite large acquisitions across the country. Bridge data center has been acquired by Chin Data, and they will start their expansion plans in India. Gold already has a presence, has plans to expand. In fact, AWS announced their availability region in Hyderabad some time back, and that itself shadows in the investments announced by so many other firms. That's going to be a state-of-the-art, international quality region which will get set up in the city of Hyderabad. Princeton, Todd spoke about briefly. They have expansion plans. And then, of course, Adani Connects, which is a joint venture between Adani and ECX, will look at setting up and expanding the platform in India. Now, all of these is being done at the backdrop of government support as well. That becomes critical in such a capital intensive asset class. So the National Data Center Policy, which is in the works, should get formalized in the near future. It puts data centers in the infrastructure asset class. The data localization norms, again, a bill which will turn into an act, will further increase it. I'll speak about this in a bit more detail in my last slide, but all of this is creating more and more support to this asset class. And even at the state level, there are states who are creating their policies for attracting data center investments. We are working with some of them to create their data center policies, and you can expect more and more awareness at the government level and more support to come in to improve building bylaws, to improve how power is supported, provided to them. All these changes will take place in the near future. Now, this is something that a lot of you would be aware of in some shape or form. You're aware of that. But a lot of people come to us and ask that question. Is this resulting into a lot of oversupply? How do Indian city stack up vis-a-vis others? Now, Kevin showed a flavor of that. Todd spoke about the land costs. We wanted to derive a parameter, and thanks, Kevin, for thinking that through, on how do the Indian cities rank vis-a-vis established data center markets. Now, as a background, and this is shown in this particular slide, as a background, data consumption is a big driver for the data centers to come up. One of the main drivers. And how do Indian cities stack up vis-a-vis population of that urban agglomeration and the current megawatt in that urban agglomeration? So we've highlighted the Indian cities at the top, but take a look at the ones at the bottom. These are the top 10 cities Kevin spoke about earlier in the presentation. And take a look at the megawatts that they have. And it's a simple math. One would add layers to this as we detail out this analysis, but just a simple megawatt and population map gives a very clear answer. If you look at the flap leaders, Frankfurt and London, their people per megawatt ratio is at 14,000 to 21,000. We are looking at Mumbai and Chennai at 71 and 156,000. That's the gap. So if flap, and we end up drawing geographical parallels between Europe and the Indian subcontinent. So if the gap between 14 to 21K and 71 to 156K is a lot. So even after these announcements, I think this gap is going to be only partially met. Two of the largest, and let's do another comparison. We Indians love doing comparisons with the next other country with population comparable to ours. Let's look at the two largest urban agglomerations in India, which is Delhi region and Mumbai metropolitan region, vis-a-vis Beijing and Shanghai. And look at that range. And Tokyo, another large, one of the largest cities in the world, they have 359 to 735 megawatts. That's just the upper limit, and we're looking at Mumbai at 289. Now, Mumbai not only is a huge urban agglomeration, that is where most of the cables land, which Todd highlighted earlier. So maybe the potential for Mumbai to go from 289 would be closer to a large agglomeration where a lot of cables are landing. So it's just the beginning. And a lot of this 289, by the way, are historical old data centers. What is going to come up now are going to be fresh, new technology, new infrastructure, completely state of the art. So I think we have a long way to go. And again, if you look at the size of 10 million plus cities, Shanghai is at 359, Tokyo there. So interestingly, almost every other city besides Pune would be a 10 million plus city. If you look at the figures, Pune will struggle to, Pune will be close, but it's still there. It's still fairly large city, and almost all the cities that you see in India, the top 7 locations, will be 10 million plus cities with much more. I suspect none of them will be left with double-digit megawatts. Kolkata remains to be seen how much further do they go. But just take a look at the populations and the megawatt. People do use data in that part of the world. People do have requirements. There are business activities taking place there. So that part of India eventually will require this basic infrastructure. So there is enough and more for us to go further here. So yeah, we recognize that population is not the only criteria. There is economic activity in that region. There are government policies, as we mentioned earlier, power availability, prices, all these things contribute. But as the first level of the analysis, we want you to see, are we heading toward a potential oversupply? And these numbers are clear indicators to suggest that we are not. I'll speak about this again finally in my concluding slide, but let me go to the next one, because this is also derived from the questions that a lot of our clients ask, and Kevin showed about this at a global level. But is this money getting translated into action on grounds? Are we seeing, as one of our clients asked us, cranes on sites? Yes, and significantly so. Mumbai, there are sites which are active. So you can see the operational ones, which is the current stock, under construction and in planning. All these 3 categories in Mumbai will increase quarter on quarter, because we know of the demand there, we know of the transactions ongoing. That's the beauty of emerging or a growing asset class. Every month, every quarter, we end up hearing new things. Chennai will catch up as well. There is a lot of under construction activity. Just in Mumbai, I suspect we are project managers to over 100, almost 100 megawatts of projects, and so many cloud projects are expected to come across the country. So you can see action in almost all. Bangalore, not so much right now. It should take up in the near future, but Bangalore also has, look at the blue, which is massive current stock. When it gets completely absorbed, when those rack spaces get completely taken up, action will shift to that city, and we will see Bangalore see a lot of action. But yeah, there is much more to be done in all. There is a good amount of, as Todd mentioned, the current stock is probably getting doubled up, and it's already in some stage of construction in India. Now let's move to the final slide for me today. But before we do that, please do keep in mind that all this data is presented in the report that we would be launching. So you can refer to this data in the future. There is a sneak peek to the cloud map in India. So do make sure that you click and download our report, which will have this information and some more teasers for you. There is more that you will probably not find anywhere else. Finally, so this is not just the end. We are probably at the beginning of this infrastructure coming in. We still do not have a data localization law in place. China, Indonesia, Vietnam, Malaysia, even Brunei have this law. We are waiting for that law to get approved. We yet to see 5G and IoT get released in India so far. The data consumption in India is already one of the highest in the world. And that is only expected to grow because the data is so cheap. The marine connectivity, the cable connectivity that Todd spoke about, that is further improving. The government is providing more incentives. And when all of this, if you see, the current infrastructure is being set up to just meet the existing demand. All these new drivers will only add to the requirement for Indian consumers, for India as a country, the corporates operating in India. All of them require this basic infrastructure to do business in the new digital world post 2020, 2021. This is how everybody is doing business in times to come. So this is a bare necessity as things are looking like, and there is more and more investment expected for basic requirements to be met up in India. Now that covers the Indian information, and I hope you found that useful. I'm sure you have questions on what Kevin, Todd, and I spoke about. So I'll just pass on the baton to Gautam. and request Gautam to lead the show from now on and ask the questions if there are any.
Thank you, Kevin, Todd, and Vivek for such an insightful presentation on data centers. This asset class to me does seem to be pandemic proof from Northern Virginia to Scandinavia, Tokyo, and Mumbai. I'm sure our viewers have questions too. You can ask the question to any of the speakers. There is a question mark call out on the top right section of your screen. Please click on it and enter the live chat and type in your questions. You can address it to any one of the speakers and I will ask it on your behalf. We have our first question here, and Vivek, you covered this briefly. There is a large amount of capacity coming to Mumbai market in the coming 24 months. Is there a concern of oversupply?
Yeah, and this is a question that we've been asked several times, as I mentioned, and to quickly answer, as things stand right now, based on the announcements made so far, unlikely. There is more in the pipe that I mentioned. There is more megawatts that will get announced for India. We will take a call at that point of time. But what is being done is just bring Mumbai up to speed with large international established data center markets. So currently, there is enough and more reasons for us to believe that we're not heading in that direction. But as I said, it's a very dynamic market. 6 months from now, 12 months from now, it will be very different numbers that we'll be speaking for. So we'll have a conversation on that again. But currently, I don't think so.
Okay. So from Kevin's perspective, Kevin, this is a question posted for you. How is India viewed by the global data center operators and hyperscale cloud providers as an investment destination?
Well, I think for so many years it was a need to enter, but a lot of the companies were either nervous to do it or they didn't see that others had done it successfully. And so now, as we studied tonight, there's been this huge flood of capital from all over the world, whether it's investment from the US, whether it's from Asia, whether it's from Europe, what have you. And so now it's understood you can succeed in India. I think there were some concerns. I recall hearing from some of the operators some years ago, can we get clear title to land? Can we get reliable power from the grid? Just a very out of date thought process from what India offers today. And so I think once that was clearly shown that everything was available, that you can build, you can be successful, and you can price your data center accordingly and be profitable, then I think we've seen this flood over the last year or so. And that, as we've mentioned today, I mean, that flood isn't stopping. If you're an international data center operator and you're not in India yet, you're way late to the party. So you need to get in line.
Thanks for that, Kevin. Todd, we did mention that Singapore has the highest capacity per capita globally. How did it become one of the leading data center markets globally? Was it regulations, incentive? Was it a regional business hub that drove this demand?
Yeah, great question, Gautam. I think some of it's just historically, Singapore is the regional hub, right? Locationally, it has that advantage. It headquarters a lot of, Asia Pacific headquarters are based. There's a very pro-business, low tax regime kind of environment. But I think a lot of the other reasons are, some are things that India can very well compete with as well. The submarine cable connectivity, we talked about a lot, a robust power grid, talent pool, those are all very important. But one thing I'd like to touch on is, in Singapore, they have two groups that it's a government policy per se, or support of the government that really helps and has helped that growth. The first one being the Economic Development Board. And what the EBD does, EDB does, is they focus on talking with all of the entities, coming in. And a lot of their incentives have been operator rather than specific data center based. So they'll engage, talk, and promote incentives towards those specific operators. So when I hear things that Vivek mentioned about the national data center policy, state DC policies. Those are areas where you can do the same and really engage and help those groups come in. The other one in Singapore was the JTC, and as there is real difficulty in limited land availability, the JTC basically helps engage and find suitable plots of land, power availability, and kind of connect and just make that more seamless and easier, especially for non-domestic Singapore players. So again, I think that type of government support, as well as I think we always think of incentives, which is great as well, but just kind of that support and focus on helping them do that. And then eventually, as the markets mature, Singapore, the moratorium, the green energy, and just that footprint, the ability to maybe think about that a little bit more in advance. Singapore's a little unique, being so small, and I think it's about 7% of all national electricity consumption comes from data centers, and has driven some of that concern for the long-term, viability. But I think India won't have as big of an issue, but they can learn from some of the issues that Singapore and groups going into Singapore have dealt with, and deal with them a little bit earlier on.
Thanks, Todd. As we mentioned, there is a national data center policy on the mix, and hopefully we will learn a lot from Singapore when we implement that. Vivek, on a related question to you, is the 665 megawatt completely deployed or absorbed in India?
So I briefly mentioned that in the presentation that Bangalore currently has a fairly large stock, which has a little bit of an oversupply situation when it comes to rack spaces, but most of the other stock is quite well absorbed. And as Bangalore absorption keeps increasing in the near future, that will come up as well. So currently, we are very similar to, in some ways, how the new warehousing tenants are in the market. So, for example, if an Amazon was picking up an FC for 600,000 square foot, India did not have warehouses, boxes of that size. Similarly, India has very limited international quality hyperscale data center properties. These are the ones which are coming up right now. So currently, most of the stock is absorbed, with some exception on Bangalore because of the recent investment. But it will be a very interesting question to track that over the next, let's say, 4 to 12 quarters, to see when these new stocks are coming up, new projects are coming up, how much of that is pre-committed by a wholesale client, how much of that will be given to retail. You come and ask that, if a client comes and asks, I want 300 racks today to move to cloud or a colo facility or a shared facility, there'll be not many options available in most cities. So there is, historically, most of the DCs were 10 megawatts and that too in phases. So it is a fairly decent situation in terms of absorption level currently, but that world is changing. The sizes are changing, and that will be a very, very good conversation to have 2-3 years from now.
Another question, Vivek, probably we know the answer, but just from Captain Srinivas, can you clarify the range of land prices that meets the target financials?
That's a very long conversation because, and it
so you may want to
city.
connect with Captain offline, because I believe every state and city would have a different land price, and how the mathematics of profitability would work would be relevant there.
Absolutely. Let me just give 3 data points to show how wide the spectrum is. So we spoke about AWS region announced in Telangana, in Hyderabad, where all the 3 sites were taken up from government, and that land value is sub 1 crore an acre. So that's sub 10 million rupees an acre. So that's one. Then let's look at Mumbai, where the Thane-Bilapur road is the spine where everybody is looking at, and that quotes there for data center lands have now reached about $3 million an acre, 21 crores approximately an acre. So that's a different. Look at the gap, and let me look at another extreme sticking to Mumbai again, you would have seen recent acquisition of Equinix in central Mumbai, and that's probably 3 times what Navi Mumbai prices are. And all these three businesses make sense. From a colo perspective, the rental that they're able to charge in dollars per kVA is critical for them to decide whether that location makes sense for them or not. But it's a very, very diverse market. It varies from city to city.
Thanks, Vivek. I think we'll connect with Captain offline. Kevin, this question is to you. According to you, what is the view, preference of DC operators on long-term leasing of space vis-a-vis buying of land and constructing on their own? What's been the trend globally? Do they own it or they take it on a long-term lease perspective? How do they see the space?
Well, I think if you're talking of the hyperscalers and what they're looking to do, ideally what they're looking to is to guess what, or determine, I should say, it would be a better word, what their run rate is going to be, purchase land, and then acquire as many incentives as possible from local government entities, whether those are tax breaks, kickbacks, you name it. And so they've done that across the world where they're able to make that monetarily feasible. Now, what ends up happening, though, is that these are the largest tenants of most data centers. What ends up happening is that they can't build fast enough according to what their plan is. They oftentimes sign large new clients, with whether that's with a corporate client, with a government client, what have you, and then they're forced to lease. And so among all these construction and leasing needs, you end up with hundreds of megawatts rolled out each year from completions and then from leasing. And so you end up getting a mix where you'll have the same hyperscaler in 3 data centers in one town and a large campus also under construction. And so as they're competing for market share, you're going to see more of this in secondary and tertiary markets. Up until very recently, it's been mostly seen in primary locations around the world. And we're going to start to see a greater blend of the second tier cloud services, as you will, coming up behind them that are doing similar things. And so there's still going to be a lot of shakeout among self-build and from leasing coming forward.
I think the clock is ticking, so I would ask the last question to Todd. Do you see renewable energy source coming into data center? As in there is a lot of thrust towards sustainability?
Yeah, Gautam, and maybe I'll, Kevin is doing a lot in this area as well, but, I think it's kind of in the rudimentary kind of beginning stages here in our region. It's more evolving in maybe North America and the EMEA. It's very challenging to find the sources to meet the issues in full. In a number of countries. I think as we've read a little bit, they're trying some things with a lot of research in Singapore, right? Floating data center, on the ocean. We're doing, kind of hydrogen-based, non-diesel, based technology would be some of the areas. But I think, at present, and maybe throw Kevin if you had anything you want to add, but I think it's been a challenge from what I've heard.
Across Greater APAC, certainly, but in many other parts of the world, it's starting to come because many of the largest occupiers in the space have said that they're going to be carbon neutral by 2030, 2040, and what have you. And so if that's going to happen, then the workloads that are currently going to areas that have maybe coal-fired power plants or what have you is not going to work any longer. And so hydropower, wind, or especially hydropower, because once it exists, it's much cheaper to run a data center on. That's going to be a key talking point going forward. And so we're going to be seeing more of that deployed in the usually very rain-heavy markets, but it's going to be a need for anyone who's looking to deploy 30 to 50 megawatts. Most large markets are extremely power constrained at this point. The few that aren't are the ones that you're seeing the largest growth on, as we showed earlier. Those are going to succeed for the time being, but many of them are not green. And so as offsets are exposed as sort of greenwashing and actual power to the data center has to be renewable, we're going to see some changes.
Thank you, gentlemen. We are out of time. If there are more questions, please email us and we'll be happy to address them. Hope you enjoyed this session. If you are ready to chart out your data center real estate strategy in India, then you can rely on Cushman and Wakefield to provide an expert advice anytime. Please reach out to Vivek or me for India-specific questions on this webinar or otherwise too. I would like to thank the speakers and our viewers once again and wish you all a great weekend. Thank you very much.